What if the economy is about to take a sharp turn?
That's the concern echoed by many financial experts, especially regarding the upcoming shifts in key economic indicators.
Welcome to Financial Insights in Minutes.
We'll provide you with time-saving summaries of the day's leading financial videos.
We'll highlight critical voices from market analysts that you won't want to miss.
Let's get started with our summaries for today's most pressing financial topics.
Welcome back to Eurodollar University. Today's discussion dives deep into Jerome Powell's recent Bombshell speech. Market shifts and economic risks are swirling around us, and Powell seems to have woken up to the reality of the situation.
Absolutely. Powell's words echoed through the financial realm, and the implications for American jobs and the economy are critically urgent. Get ready for a financial voyage through turbulent waters.
What's the central theme from Powell's recent remarks?
The core thesis is chilling. Powell confirmed significant risks ahead, hinting that the Fed might be forced into drastic rate cuts as early as this September due to a rising unemployment rate.
Let's dive into key points. First up, the Fed's dramatic shift in tone. What gives?
Powell's earlier confidence took a nosedive. He shifted from declaring a robust labor market to revealing its vulnerabilities, acknowledging risks that could push us closer to recession.
What about unemployment? What are the numbers telling us?
Current figures show unemployment at 4.3%. That's a significant increase. And if Powell's warnings hold true, we could be staring at even higher rates soon.
And how has the market reacted to these statements?
Talk about a shaky response. Powell's statements stirred fears, resulting in asset sell-offs and stock corrections, further highlighting volatility in the financial markets.
Now on to predictions. What's on the horizon?
Powell's hints suggest aggressive rate cuts are imminent. If they do occur, what repercussions will it have on inflation and employment opportunities?
And what about a possible recession? Is it in the cards?
It's looking ominous. If unemployment continues to rise under these conditions, we may well be heading straight into recession territory.
To wrap up, what are the essential takeaways?
In short, Powell's statements showcase significant shifts in economic outlook, and immediate action from the Fed is critical to mitigate potential downturns. Strong measures are required to weather this financial storm.
As we close, let's ponder this. How prepared do you think the market is for the potential changes in the Fed's policy?
It's time for you to weigh in. Drop your thoughts in the comments. What do you think is the best move amidst these changing tides?
Welcome to Thoughtful Money. Today, we're navigating through the murky waters of the economy with macro analyst Wolf Richter. He'll share his insights on why many economic indicators might be misleading these days.
Indeed, there's a war of conflicting narratives, with bears pointing to recession fears while bulls highlight GDP growth. Wolf will help us sift through these claims and uncover the truth behind the numbers.
So what's the crux of Wolf's argument today?
Wolf argues that key economic indicators, like the yield curve and unemployment data, have been rendered unreliable due to various external factors. This could lead us to mistakenly predict a recession.
What's going on with the yield curve?
Wolf explains that the yield curve's inversion no longer reliably predicts recessions as it once did, largely due to unprecedented interventions in the bond market.
How does the labor market play into all this?
Wolf highlights that traditional labor statistics are flawed, particularly due to the influx of undocumented workers not accounted for in job reports.
What about consumer spending?
Wolf says that while sentiment may seem negative, actual spending remains robust among middle and upper income brackets, supporting economic resilience.
What does Wolf say about inflation?
Wolf suggests we're experiencing resilient inflation, with pressures from services and housing remaining strong as indicators of long-term trends.
What about the fiscal situation?
Wolf emphasizes that the fiscal challenges are substantial, with increasing deficits that may force inflation as a coping mechanism, which has its own consequences for economic stability.
What does Wolf predict for the future?
He anticipates that while high interest rates may cleanse bad debt from the economy, overall consumer spending remains robust, potentially keeping a recession at bay.
And inflation, any thoughts here?
Wolf foresees inflation persisting above the Fed's target, complicating the financial landscape for consumers and policymakers alike.
So, what's the big takeaway from today's discussion?
Staying informed about underlying economic trends is crucial as traditional indicators lose their significance. Flexibility and caution are sensible strategies in today's unpredictable landscape.
What should individuals consider as they watch this space?
It's important for individuals to keep an eye on market shifts, remain engaged, and adjust their strategies accordingly to navigate these complexities.
Welcome to Trade Brigade. Today, we're navigating the waters of market trends as we approach Nvidia earnings. Buckle up.
It seems like there's a lot of bullish sentiment bubbling up, but let's keep a cautious eye on potential pitfalls in the charts.
So, what's the central thesis of this week's trades?
The main point is, despite a bearish attempt from sellers, the market shows solid bullish trends, likely melting up ahead of Nvidia's earnings announcements.
And what about the sellers? Were they able to make headway?
Not at all. Sellers failed spectacularly, showing a solid close-by buyers right back up, demonstrating strong market support.
What do the indicators tell us about market sentiment right now?
The indicators are glowing green. There's a notable increase in volume and breadth, confirming the optimistic tone leading into earnings.
Nvidia's earnings are around the corner. How significant is this for the market?
It's huge. Nvidia's report will likely create ripples across tech stocks, sparking volatility and possibly affecting the broader market.
What predictions do we have for the upcoming week?
If bullish trends persist, we could see a significant melt-up, especially if Nvidia posts strong earnings. The market could push towards all-time highs.
And what if sellers bounce back?
That's a possibility. Sellers could test important support levels, but we'll track how Nvidia's results sway the market dynamics.
Wrapping it up, what are the key takeaways?
The market shows bullish potential moving into earnings season, though we must remain cautious if those sellers regroup. What's your outlook?
How should investors approach this week?
Engage actively. Earnings can reverse trends, and being prepared will keep you ahead. Share your trading strategies in the comments.
Welcome to the Crowded Market Report. Today, we're diving into the fascinating world of 0 days to expiration options with a seasoned options trader, Mark Cerini. This topic is heating up with so many traders jumping into the options game.
Indeed, Mark brings a wealth of knowledge from his experience on prop desks and running options books. So let's uncover how a different perspective on trading options can give you an edge in today's markets.
What's the core message from today's discussion with Mark?
The main idea is that grasping how market makers and dealers behave is crucial if you're trading options. Their hedging decisions can significantly influence market volatility and price movements, especially in 0 DTE options.
Let's break down some key takeaways. What's happening in the options market?
Market makers use dynamic hedging strategies that can amplify or compress volatility. Since 2020, as retail investors flooded into options, the overall volume has skyrocketed, overtaking even the cash equity business.
0 DTE options seem to be a hot topic. Why are they so unique?
They behave sharply due to being right at expiration, allowing traders to capitalize on quick, volatile moves. Understanding Greek dynamics is essential for this strategy.
What about the gamma environments? Why do they matter?
A positive gamma environment typically results in market stability, while negative gamma can result in wild swings as dealers hedge their positions. This dynamic is vital for traders to monitor.
Looking ahead, what trends should traders watch out for?
The explosion in options trading isn't slowing down. More retail traders will jump in, and we're likely to see a continued focus on 0 DTE options as volatility remains a key factor.
What about trader behavior? What changes are on the horizon?
As traders become more savvy, we will see a shift towards stronger risk management techniques, and a deeper understanding of dealer behavior become integral to successful trading.
To wrap things up, what are the key takeaways for our viewers?
Traders must recognize that understanding how dealers operate is essential for navigating the options landscape effectively. As the market evolves, so too should their strategies.
Before we sign off, what lingering thought should traders consider?
As the options market continues to develop, how will you adapt your strategies to align with market dynamics? Leave your thoughts below.
Welcome to Kitco News. Today's pressing question: is the Federal Reserve falling behind with its current policies as election season heats up? Joining to decode this economic enigma is Joseph Wang, a former senior trader at the Fed.
Right. Joseph provides an insider's perspective on the intricate operations of the Fed and shares his insights on how the upcoming elections might shape economic policies. It's time to dissect this situation.
What's the overarching thesis from today's discussion?
The core thesis highlights that the Fed aims to adjust its policy as inflation remains above target, while there are signs of a softening labor market. The balancing act between stabilizing prices and preserving jobs is crucial.
Let's delve into the key points. What's the current economic climate like?
Right now, inflation sits at 2.7% annually, which is above the desired rate. The labor market, however, is showing signs of strain, with unemployment creeping up to 4.3%.
What's this shift in the Fed's approach?
They're indicating a readiness to cut rates, focusing on economic data trends. The delicate balance is key. They want to support job growth while keeping inflation in check.
How might the upcoming elections influence the Fed?
The elections hold substantial sway over future monetary policies. Depending on who wins, market confidence might waver, affecting both businesses and consumers.
What predictions does Joseph have moving forward?
He highlights the potential for the Fed to coordinate more closely with government policies. As leadership changes, we may see a shift in how political dynamics impact economic strategy.
Any additional predictions we should consider?
Yes, Joseph warns that the uncertainty might lead to cautious spending from consumers and businesses. If businesses sense unfavorable policies ahead, it could lead to a slowdown in economic activity.
To wrap things up, what key takeaways should we note?
The Fed is at a crossroads, needing to manage inflation while keeping the labor market stable. With elections looming, the outcome may very well determine the future trajectory of these policies.
We want to know your thoughts. How do you predict the Fed's actions will evolve post-election?
Share your predictions in the comments below. Let's keep this conversation going.
Welcome to Mott Capital's Market Chronicles. Let's dive right into today's hottest topic, Nvidia's upcoming earnings report. Is the hype for Nvidia's stock really worth it? Our expert is here to guide us through the currents of market expectations and potential outcomes.
Absolutely. We're going to take a deep look at Nvidia's earnings expectations and how the options market is preparing. Buckle up, because it's a turbulent ride ahead.
So what's the big takeaway here? Is Nvidia in hot water?
The core thesis suggests Nvidia may face challenges in meeting the overly optimistic earnings expectations set by the market. The upward surprises have been shrinking, making it tougher for Nvidia to shock investors positively.
Let's break down those key points. What's the buzz about Nvidia's earnings expectations?
Nvidia is anticipating a hefty earnings growth of 139%, with revenue projected to hit $28.7 billion. The spotlight is on data centers, expecting to rake in $25 billion alone.
What about those earnings surprises? How's Nvidia been doing?
The size of surprises has been dwindling. Just look, a 22% surprise last year has now shrunk down to around 5.5%. The market's become savvier at pinpointing Nvidia's performance, making it tougher to surprise positively.
What's the vibe in the options market leading up to this report?
Implied volatility is soaring at around 67%. This means traders are anticipating some significant action, a potential 9% swing either way post-earnings.
What can we imagine will happen after the earnings results release?
If Nvidia fails to exceed these lofty estimates, it could face a steep price drop. But if they manage to deliver a significant earnings surprise, buckle up for a wild ride.
And how will volatility play out after the reads?
Typically, post-earnings, implied volatility sees a sharp decline, a potential dive. If calls aren't profitable after earnings, we could witness some serious sell pressure rolling in.
To wrap things up, what's the bottom line?
Nvidia's situation demands strategic caution. High expectations create a tough hurdle for them to clear, compelling us to remain on our toes for the earnings reveal.
Before we head out, drop some thoughts below. What are your predictions around Nvidia's earnings?
Definitely want to hear how you think Nvidia will fare. Don't forget to subscribe for updates.
So, we've explored the implications of Jerome Powell's warnings about unemployment and economic uncertainty.
Richter's insights further revealed the unreliability of economic indicators, shedding light on misguided predictions.
The contrasting perspectives on Nvidia's earnings strategies raised critical discussions about investor sentiment in volatile markets.
Be sure to stay tuned for our next episodes where we'll further dissect these pressing financial.
If you have ideas, thanks for watching Financial Insights in Minutes for August 25th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.